I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. The U.S. winter wheat harvest is officially underway and off to a relatively quick start. The USDA's crop progress report on Monday showed that 5% of the crop was harvested as of Sunday. That compared to 3% seen the same week last year. USDA meteorologist Brad Rippey says Texas and Oklahoma are leading the way.
Leading the way with 23% harvested, both Oklahoma and Texas. In Oklahoma, that's very quick because the 5-year average pace is just 8%. Other states reporting harvest progress this week: Arkansas 10%, California 5%, and North Carolina 4% harvested.
Rippey noted that some of the southern states should continue to run about 1 to 3 weeks ahead of schedule. Nearly all major wheat-producing states are reporting heading progress at or ahead of their 5-year averages. Illinois is that one exception, though. As for winter wheat conditions, the USDA reported that the percentage of the crop in good to excellent condition was unchanged at 26% this past week. That is far below last year's 52% and the worst for the week in over 2 decades. The worst of those conditions continue to be focused in the central and southern plains, and those numbers shouldn't change much moving through the harvest season. U.S. soybean crushings maintained their record pace in April, supported by strong demand for product markets. The USDA said oilseed processors crushed 218.5 million bushels of soybeans during the month, up 8% year over year. Additionally, year-to-date crushings for the marketing year are running 8.5% above the previous season. Soybean oil and soybean meal inventories declined last month, driven by stronger demand. Soybean meal stocks fell well below the 5-year average. Soy meal crushers have been struggling to keep up with the demand despite shortening their seasonal maintenance window. Meanwhile, U.S. soybean oil used in renewable diesel and biodiesel production surged to a record in March. Total usage was 1.28 billion pounds, up 54% from March of 2025. Soybean oil was heavily favored over other feedstocks as the share of soybean oil used in the biomass diesel production rebounded during the first quarter of 2026. While domestic demand is doing the heavy lifting right now, the export market remains the missing piece. The market could see substantial further upside if China decides to step in with larger, unexpected purchases of U.S. soybeans later this season. The Trump administration announced plans to make U.S. cotton great again. Last week, the USDA announced the Great American Cotton Plan. The initiative aims at strengthening the cotton farm economy, restoring domestic textile manufacturing, and expanding cotton trade opportunities and increasing demand for products made with American-grown cotton. The initiative is in response to 5 consecutive years of negative returns for producers, as well as increasing competition with synthetic materials. The U.S. cotton industry relies heavily on exports due to declining domestic manufacturing. Exports are set to account for about 88% of total demand this season. Export demand has been severely muted over the past few seasons due to lower Chinese demand and higher competition with Brazil. Despite that, cotton exports have improved lately. As of the week ending May 21st, total commitments of U.S. cotton exports are running just 1% behind last season. Additionally, new crop sales for the upcoming season are running at a 4-year high following sluggish demand. The USDA plans to implement increased marketing rates for upland cotton, as well as support of the bipartisan Buying American Cotton Act introduced in Congress last year. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.